Welcome back to Power Lunch. I'm Mike Santoli, and it is time for Trading Nation. Twitter shares backing off today, but check out the moves over the past year. The stock's putting its competitors to shame, rallying nearly 50% since January, making for its best yearly performance ever. Those gains, even as Facebook and Snap have both tumbled. Todd Gordon of TradingAnalysis.com is with me here at the NYSE, while Mark Tepper of Strategic Wealth Partners joins us from Cleveland. Todd, how's this set up here? It's a jumpy chart. I know it's a little bit tilted higher, but how's it look to you?
Yeah, Michael, as a technician, you would certainly appreciate this. There's all sorts of cool technical patterns here known as head and shoulders. Traditionally, they're reversal patterns. So I'll draw the predominant head and shoulders, which is going to be a high, a higher high, oh, that's ugly, followed by a lower high. We should have broken down in TWTR. We did not. And what was interesting, if you take that pattern and you just kind of isolate that and flip it upside down, here on this little guy right here, we have an inverse. So a failed head and shoulders, I'm getting very technical here and I apologize, but a failed head and shoulders actually results in a strong move. So despite a weak overall market, I am long the stock. I was hoping for a gap close right here. That's at about $38.50. If the overall market can stabilize, I feel like Twitter can go up and close that gap. So I like it.
All right, so relatively strong charts in weak markets are definitely worth taking note of. Mark, on a fundamental side, it's never looked cheap. It's been sometimes hard to make a good financial case for Twitter, but how are you treating it?
I agree. I really like it. And I guess from a fundamental valuation perspective, if you look at the PEG ratio is at 1, which in my opinion does make it look cheap. Users love the real-time content and the conversational format, and quite frankly, it's addictive, especially if Trump continues to tweet. And now the app has been revamped for a better user experience. And really the knock on Twitter is that the daily average user growth has been slowing for the last few quarters. But keep in mind that they're really focused on shutting down fake accounts. So, I think a number like that is really important for Facebook, where people might only log in once a day. But with Twitter, it's more about the user engagement. How many times a day are they accessing the platform? People might check their Twitter feed 10 times a day. That's impressive. So they're doing everything possible to increase engagement levels, and live streaming's a big part of that. And as you increase engagement, that's going to lead to more advertisers. And I love their new advertising platform. They're charging a $99 a month subscription. And I love that because it means recurring revenues, and there's nothing better than recurring revenues. So we like the stock.
All right. Yeah, for better or worse, it's become kind of indispensable for a lot of folks. I will note, too, sell-side analysts have a price target below where it's currently trading on consensus. So still some skepticism out there, which can be a good thing. Thanks very much, Mark and Todd. For more Trading Nation, head to our website or follow us on Twitter at Trading Nation. Kelly, I'll send it back to you.
Thank you, Mike, very much.
When markets get volatile, don't be afraid to admit that you don't know where things are headed. When you're uncertain what to do, sitting on the sidelines is not a bad idea. Sometimes the best trade to make is no trade at all. In other words, don't do something, just sit there.